Hello, listeners. It is the last Friday and last day in the month of January 2025. I'm excited to welcome you to yet another expository and interesting episode. The program series is Inflation Dynamics and Economic Development. I am Titilola Ogushono and it is Amorgate Radio Communications. Last episode, we discussed the role of SMEs, that is small medium enterprises, to economic growth and development in any nation. Statistics according to WTO 2020 revealed that SMEs provided 70% of jobs and contributed nearly about 35% of GDP in developing countries. We mentioned that the roles of SME included serving as the engine room of economic growth. We said SMEs were crucial for achieving or maintaining competitive and efficient markets in any nation. And of course, we said we cannot talk about poverty reduction in any nation if we don't talk about developing the SMEs, the growth and development of SMEs. We spoke about being responsive to changes in the economy. That is the role that SMEs play in a nation. They also provide supply chain function, and we also talk about the social impact of SMEs in any given nation, and that's by creation of employment opportunities, especially for marginalized groups. We examined the findings of 2019 SME Business Climate Index, which looked at countries that were best in class for SMEs. And this report carried out an assessment of the business environment for SMEs in 13 selected economies. And the SMEs, were based on 6 components, which we mentioned last week: the red tape, tax policy, labor market flexibility, financing, export opportunities, and competition. And in terms of red tape, we looked. The report considered regulatory quality in these countries, the business freedom, government policy relating to businesses. And findings reviews, the top 5. We have the top 5 countries. We have Singapore at number 5, Netherlands at number 4, the United States at number 3, Hong Kong at number 2, and Canada at the first position. And we also mentioned that the top 3 enjoy favorable tax policies and relatively good financing conditions. And on this program series, the first kind of infrastructure we'll be considering is financial infrastructure. So you can see that even one of these components, the 6 components, it was still dedicated to financing. And we always said that the financing is regarded as the lifeblood of economic activities. And if in some continents SMEs represent about 99% of businesses, they employ about 70% of official workforce and yield about 50% of GDP in some countries, it implies that SMEs can only survive, develop, and thrive in the market only when granted adequate financial support or adequate accessibility to capital. In fact, I also mentioned one of the episodes that the World Bank report noted that funding is the Achilles heel of the growth of SMEs. And if you look at the top 5 countries that we considered, you can see that was no African country there. So we wrapped up the episode with the promise that we'll be considering African countries with thriving SMEs. Yes, there are some African countries that have gotten it right in terms of the growth of their SMEs. And we said we'll be unraveling the factors, looking at the macroeconomic environment, the financial factors that have strengthened the growth of SMEs in these respective countries. That's what we'll be looking at on today's episode. SMEs play a crucial role in both global and domestic economic growth and development. In addition to provision of essential goods and services to their local communities, they also create jobs and encourage innovation. The World Bank report reveals that small businesses represent 90% of all businesses. And according to MasterCard, Sub-Saharan Africa alone has about 44 million MSMEs. And this position was also supported by the findings of Rondi et al. That estimated that we have about 44 million SMEs, operating in SSA, that is Sub-Saharan Africa. Further statistics has revealed that SMEs account for up to 90 businesses of businesses in sub-Saharan Africa. So within the ecosystem of some African countries that we'll be mentioning today, where our focus will be on, like Kenya, Rwanda, and Mauritius, there are great lessons to be learned. One of the unique qualities of African entrepreneurship, as posited by Matthew Cumming, the Chief Investment Officer for Business Partners, is its ability to address problems existing at the grassroots, because they're closest to the people. And there are various examples across the African continent. We have an example of the Nigerian Digital Bank, Kuda, also probably refers to as the Bank of the Free by a lot of people, has achieved great strides in making banking and financial management more accessible to the average Nigerian. We have the example of Uganda Safe Border, a startup with the main motive of changing the perception, the traditional way of viewing motorcycle taxi drivers. So we have a lot of examples across the continent of Africa. We'll be considering Kenya, because it has been recognized by World Bank for being a business-friendly destination in sub-Saharan Africa. So for the growth of SMEs, this country is worth consideration. So we'll be looking closely at Kenya on today's episode. Why Kenya? Again, because that's the status of African economic powerhouse. Several SMEs in Kenya have succeeded, and research has shown that they've been able to leverage digital technology to overcome a lot of their constraints. And Kenya has produced large volume of tech disruptors. And Kenya is popularly called the Silicon Savannah. Kenya is called the Silicon Savannah because it is envisioned to be a global hub for technological innovation. And Silicon Savannah is a technology ecosystem in Kenya. This term is a play on Silicon Valley and the grassland Savannah ecosystem, which is a dominant feature of Kenya's ecology. And this is evident with top players about the banking enterprise M-Pesa and the social enterprise M-Kopa. I try to look at what are those factors that have strengthened Kenya's position. And some of the factors: increased power supply, structural reforms, infrastructural development. They have skilled labor force compared to regional counterparts. They have a very developed banking sector in that region, if not the most developed in that region. And this is really important, because when you talk about financial infrastructure, we are talking about how strong the financial institutions are, the financial markets are. You are talking about financial inclusion, the payment system. You are talking about even digital system, convenience in carrying out transactions. And one thing that stands out for Kenya, which we'll be considering again, is that they have large number of their population have access to financial service, and they have business-friendly reforms, and there is a great focus on technology. And there are some interesting statistics about the banking sector in Kenya. A significant part of the market is dominated by few large banks. The Kenya Commercial Bank, the KCB, and Equity Bank hold about a combined market share of 25%. However, one thing that stands out clear that I mentioned is that they have high rate of financial inclusion. About 79% of adults in Kenya have a bank account, and this is remarkably high for a developing country like Kenya. So it makes it interesting to find out how did they achieve this? If it's a developing country, what have they done significantly better than other countries within the sub-Saharan Africa? What have they done distinctly better? And going by the statistics, you see that about 75% of the Kenya banking market is controlled by just 9 commercial banks, and they experience a significant surge in total banking sector asset, with a growth of about 17% as of 2023. And projections are that the banking market is expected to continue to grow and even experience significant growth in net interest income. And I tried to look at the macroeconomic environment of Kenya, and I got a report from Kenya Bankers Association, the 6th edition of the State of Banking Industry, the SB report, and it shed more light on different factors that play significant role in Kenya's economic growth path in 2023. At that sign of the report, the economy grew by over a 5%, I think 5.6%, if I'm right, but over a 5%. If our banking deposit grew by about 15.1% in 2023, surpassing the 13.1% growth in the previous year in 2022. And a major factor was that this was driven by mobile and online banking. So the use of technology, increased the banking deposit from 13.1 to about 15.1. That's a growth of about 2%. Okay, and again, there was growth in the commercial bank lending to the private sector, which was about 13.9% in 2023 compared to what they had in 2022, 12.5% in 2022, and they had 8.6% in 2021. So if you look at that, is about a 1.4% growth in commercial bank lending to the private sectors, that's the SMEs, resulted in the economic growth rate about 5.6%. That is huge. So we talk about SME financing. The strength of the financial infrastructure would really determine the growth of the economy. Again, the Kenya shilling strengthened against the dollar, and that the reasons were stated was as a result of an increase in export earnings from their tea, from their coffee, from the agricultural exports, and inward remittances, still finance playing a major role. So I tried to look further that what were those measures that the government, adopted to stabilize the Kenya shilling. So I stumbled on it, one or two. The first I'm going to talk about is that on the 10th of March 2023, Kenya signed agreement with Aramco, ADNOC, Global Trading Limited, and ENOC for petroleum supply to address the issue of USD liquidity challenges and exchange rate volatility. These are financial issues, okay? And the expected result was that they expected an increase in our foreign reserves, stable exchange rates. They wanted to reduce speculative pressure, and also, they wanted to have predictable assured petroleum supply with cost savings, still financial in nature. Now, don't forget why we are considering Kenya, looking at African countries with striving SMEs, is look at the macroeconomic environment, look at their financial infrastructure, look at the policies that government has deployed so that we can see what lessons can other African countries learn from them, okay? The second measure they adopted to stabilize the Kenya shilling was that the Central Bank of Kenya, the CBK, issued the Kenya Foreign Exchange Code, the FS code, on the 22nd of March, the same year 2023, to commercial banks to enhance the integrity and effectiveness of the Kenya's wholesale FX market. Okay, and the code definitely had some principles guiding it, but these actually helped stabilize the currency of Kenya. If you're just joining us, thank you so much for joining. On today's episode, we are unraveling African countries, especially those within sub-Saharan Africa, that have unlocked the potentialities of the SMEs, that are experiencing thriving SMEs. And of course, it has helped to improve their level of economic growth in their countries. So we'll go further to examine, how has Kenya been able to unlock the SME potential. And one thing that I found is that one thing they leveraged was how they were able to unlock SME's potential through financial literacy. We say on the general note that a nation cannot grow beyond the capabilities of its people. So definitely the strength, the growth of your SMEs, will also be dependent on the level of financial literacy, management of the entrepreneurs. Okay, so let's see if how this has really helped Kenya as a nation, so other people can learn from it. It's noted that for Kenya, the MSMEs, that's the micro, small, medium enterprises, they're actually the backbone of the country. There are about 7.4 million MSMEs in Kenya. and they provide approximately 14.9 million jobs to their citizens. In fact, but the challenge is that they noticed in Kenya was that, according to Kenya Bureau of Statistics, many MSMEs do not last up to 2-3 years in business. In fact, when they last, most of them do not survive getting to the fourth year. So when they looked at it, they looked at many factors that could have been attributable to this situation. And part of the challenges they saw was high level of competition, unhealthy competition, insufficient working capital, and inaccessibility to affordable finance. So they saw that this was it. That's why we talk about taking data. We say this a lot, that government would take informed decisions, come up with policies based on the data they've collated, and you speak to what the issues really are in an economy. So they looked at it. So most MSMEs at that time did not last up to 3 years. So how did they move from that position of MSMEs not being in existence for 4 years to a place where they have thriving SMEs? So let's look at what they did the way forward. Now, the first I'm going to start with was what I saw, that the Bankers Association in 2018 launched what we call the INUKA Enterprises Program. This is a capacity program strategically designed to de-risk entrepreneurs, enabling them to have access to affordable finance. And I like the way they did. It was about capacity, building, their capacity in terms of how to handle finance. If you provide finance to your entrepreneurs, but you do not teach them financial literacy, you do not teach them how to invest, you do not teach them how to strategize in terms of even analyzing the risk, both systematic and unsystematic risk. If you do not teach them how to navigate through this risk factors, how can they run profitably? So, they did it and it has worked for them. And more importantly, what they did was to equip their entrepreneurs with financial management skills to run viable and profitable businesses. You understand, cash flow principles, working capital principles, investment principles. You understand what it means to do investment appraisal techniques. This will really help, and it has helped them. Financial literacy. And as of July 2024, at the end of July, they had over 70,000 MSMEs that have received financial, literacy. And of course, with over 5.8 billion, the Kenya shillings given to viable business through bank partnerships via the program. I know in Nigeria there was a program like that, partnership with I think it was Lagos Business School and was it First Bank back then? Yes, but it's more about not just giving the loan to the people. It's even about equipping them with financial management skills, because that is what they're going to need to grow the businesses. In fact, they also had mentoring sessions for entrepreneurs, though it's still low, but they've had, successfully had about 40 mentoring sessions for the entrepreneurs. So this INUKA Enterprises Program is a program that I feel other countries can also emulate, they can copy from. And if they have done something, let's get statistics and see if it's really working in terms of financial literacy for SMEs. So let's look at another factor that has helped Kenya, and that is the establishment of a dedicated state department for micro, small, and medium enterprises within the government. So they have a state department dedicated for that, and there is a strong focus on supporting SMEs growth through policy formulation and development. In fact, they have what they call the Hustler Fund. I'm sure a lot of it. I like the way it was captioned, Hustler Fund. So it depicts what the fund is actually meant for, and it's for microcredit access. It's a government-backed microcredit scheme, and the focus of this Hustler Fund is that it's majorly for those in the informal sector. Now, when you talk about SMEs, we have the formal SMEs, and that is actually easy to get, but we have majority of the SMEs in the informal sector. So it means that what could have helped that environment thrive is the focus on the informal sector, having a fund and called the Hustler Fund that is majorly for those in the informal sector. So when I saw that, I said, no wonder the SME is growing in that region. Is there another thing that worked for them in Kenya? Yes, there's another that I saw, and that is the establishment and implementation of credit guarantee schemes. So the establishing and implementing credit guarantee schemes really helped them. On the 8th of December 2020, the government of Kenya, through the National Treasury, rolled out the CGS, that is the Credit Guarantee Scheme, which is anchored on the public finance management. And government established this credit guarantee mechanism as a risk mitigation strategy for lenders, for those who would lend money for the banks. And the aim is to encourage lenders to provide loans to SMEs. We've said that finance is the lifeblood, of SMEs. So if you want them to grow, definitely there must be policies, there must be mechanism, there must be structure, deliberate structure, put in place to ensure adequate accessibility to finance. And this is what they've done, okay? And that's because sometimes the collateral required, by lenders from SMEs are not always there. So they looked at it, and that was why government came up with this credit guarantee scheme, the CGS. So let us look like how is it implemented. It's actually implemented through a credit guarantee agreement, which is executed jointly with the participating financial intermediaries. We call them the PFI. So through this CGS, the government commits to pay the participating financial intermediary, could be the bank, a portion of the outstanding principal amount in the event of default on qualifying credit facilities given to MSMEs. And I looked at it. That means it means that they've agreed that, okay, if we give out loans to our people, to the MSMEs, okay, there's an agreement. Definitely there are prerequisites once they qualify for it, and you give out those loans to them. If they cannot pay you back, the government has a scheme to pay back a particular percentage of the principal. So it's a win-win for both parties. The lenders are secure, they are assured that even when the business does not grow, if some unforeseen contingencies come up and those who have taken the facilities cannot pay back, the government is going to pay them back. So we want to give out loans in that kind of instance. So it has really helped. It's a win-win. And on the side of the government, it means that the more people can grow, they can produce, it improves your level of production capabilities, improves your GDP, that your economic growth, if sustained across all the sectors. Of course, you have SMEs in different sectors of the economy. If there's a balanced growth, they're going to lead to economic development. It becomes a win-win. I've seen, and this credit guarantee scheme is worth studying. And I look forward to even ask, that was the vision of the credit guarantee scheme. And I was not surprised when I saw that the vision of the credit guarantee scheme, implemented by the Kenya government, is to be a world-class credit guarantor of the growth of MSMEs. That is their vision. That's where they're envisioning that they're going to be. And the mission is to enhance not just the SMEs, the micro, small, medium enterprises, access to finance through innovation and partnerships in provision of credit guarantees for sustainable growth. And I looked at the core values of this credit guarantee scheme, and I love the core value because 1, integrity, 2, accountability. It means that in dealing with their processes, in dealing with the structures, they are going to hold these values there, okay? Accountability, diligence. Yes, I like that. The fact that we are going to pay part in the end of default is not saying that you don't have to be diligent. You have to ensure that you can pay. You have to remain profitable. I like resilience, ability to bounce back, in the midst of, hardship, in the midst of unforeseen contingency, in the midst of challenges, in whatever form. Is discipline, that they are professionalism. And I like the last core value, is teamwork. And I look further to see, okay, let's even look at the core objectives of the CGS. And there are three main objectives, and I will want to look at this. Let's look at the first objective of the CGS, that's the Credit Guarantee Scheme of Kenya. The first is to improve and stimulate the economy by encouraging additional lending to MSMEs, increasing investment opportunities for the MSMEs, and strengthening skills and capabilities of proprietors of SMEs. So I let's look at the first objective. I find it very interesting. It's not just about providing investment opportunities, but also strengthening their skill set and capabilities. It's about training them. It's about that we have some technical skills that entrepreneurs should have. And definitely it's about looking at those technical skills and strengthening those skills, the financial skills, the strategic planning skills that you should have, the accounting skills that you should have, the investment skills that you should have as SMEs, and also the behavioral skills that you have. Taking ownership, leadership, team player, and being a team player, effective communicator, emotional intelligence. I like this objective and it goes a long way. Okay. And also look at the second objective is to create a conducive business environment and promote partnerships between government and financial intermediaries with respect to credit guarantees for MSMEs and other related activities. So it's not just about the micro level, but also the macro level. And because they have this, in place, it's going to inform all those policies. We mentioned some of the policies that they implemented. The agreement they signed with the Global Trading Limited and Co., and also the issuance of the Kenyan Foreign Exchange Code, the FS Code. All of this will be born with the mind to create conducive business environment for the SMEs to thrive. And the third, which I'm going to mention, objective is to facilitate the financing of MSMEs, increasing investment opportunities for MSMEs by partially guaranteeing credit advance to the enterprise. That every country would have its peculiar challenges. Now, do they have the peculiar challenges? Yes, of course, they still have in Kenya. But ability to navigate, through these challenges by, challenging a path in terms of policies that would be directly tailored towards solving those peculiar challenges, things that are peculiar to you. That matters a lot if you are going to look at having a thriving environment, especially a thriving business investment environment for SMEs to grow. Are there other measures deployed by the government, by Kenya, that help SMEs? Yes, we have the Development Bank SME loan product, and they have dedicated loan programs offered by development banks specifically tailored to the needs of SMEs. And one unique feature is that they offer lower interest rates and flexible repayment structures. So no wonder SME is thriving there. And again, they also have FinAccess Business Program, and this FinAccess Business Program is an initiative of the Central Bank of Kenya. The program is developed to encourage banks to provide dedicated SME financing product with specific features to cater for the needs of smaller businesses. And the last but not the least measure they deployed is tax incentives for SMEs. They have tax breaks and deductions, provided to SMEs to encourage investment and growth and to ease their financial burden. Wow, that is a lot. I find informative. I find that other African countries can also learn from Kenya. Wow, I wish I could go on and on, but I would have to draw the curtain here on today's episode. I hope you have learned one or two things on today's episode. Remember, the reason why we do this. If you have missed any of our previous episodes, you can go to our YouTube pages. We have most of previous episode uploaded there. And if you want to learn more about us, the website is www.thearmorgate.org. You can get us on all our social media handles. LinkedIn is Armorgate, Facebook, Instagram, it's Armorgate. And if you have questions, comment, feedback for us, the mail to send all of this to is contact@thearmorgate.org. And please remember to join us next week on the programs. Monday through Friday is 5 p.m. WAT. And my program will come up by God's grace next Friday. That is next month, okay? At the same time, 5 p.m. WAT on Armorgate Radio Communications. I'm smiling because next week is already next month. And on this note, I'm saying happy new month in advance to everyone. And I wouldn't go without leaving a quote from Nicole Snow, which says, "A small business is an amazing way to serve and leave an impact on the world you live in." So start thinking about entrepreneurship. I remain Titizola Ogunsona saying bye from here.